The expressed goal of the president of the New York Stock Exchange is to have every American own a share of American industry. One brokerage firm is using 3 stockmobiles to deploy its itinerant customers' men to open up new territory. This stockmobile covers Worcester, Springfield, Wellesley, Framingham, and Lynn, Massachusetts. It is never farther away from the New York market than a telephone pole.
I was thinking of United Shoe mostly. I haven't had a chance to look at it yet, though.
Well, that's one we don't carry on our board here, and I'd have to check in our paper for the price on that.
Bob, how will this recent rise in the margin requirements affect my account now?
The 50% margin requirements on purchases made before the directive will not be affected, but any purchases made after the directive came out will require 60% margin.
Anytime you're in any of those cities, be sure to stop in.
Fine.
Say hello. See what the market's doing.
That's very interesting. I'll look for you in Lynn, though, next Friday.
All right.
Thank you.
Not at all, sir. Glad to have met you, and stop in anytime.
Well, it seems to be holding on to its gains. The steels are up, the oils are up, the chemicals are up. Everything seems to be in proper order today.
Well, if anything unusual happens, let me know, will you?
I certainly
You
will,
get my
Mr.
phone number, and
I do. Thank you very much for coming down. Look, why don't you take this growth stock book home with you? Some winter nights you can look it over.
Thanks a lot.
Some good ideas in it.
Alcoa, Aluminum Company of America, in cooperation with CBS Television, presents the distinguished reporter and news analyst Edward R. Murrow in See It Now, edited and produced by Mr. Murrow and Fred W. Friendly. A weekly presentation of Aluminum Company of America, the nation's leading producer of aluminum. Now, speaking to you from the control room of Studio 41 is the editor of See It Now, Edward R. Murrow.
Those stockmobiles on the street bring the stock market full cycle, because it was on the street in 1792 under a buttonwood tree that the stock market, the stock exchange, began, with 24 brokers trading. Since then, much has happened to the market. Much money has been made and much has been lost. Last week, the Federal Reserve raised the margin requirement 10%, from 50% to 60%. That is the money you have to pay down in cash. Tonight, attempting a brief report on the bull market, we revert to a report that we made some 14 months ago when we attempted to take the television audience down to the floor of the New York Stock Exchange. This is the New York stock market. It has been called the greatest auction ring on the face of the globe. An average of $57 million changes hands here every day, $1/5 every minute. When more people want to buy a stock than sell it, the price goes up. When there are more sellers than buyers, the price comes down. On our See It Now report of 14 months ago, we followed the purchase of 100 shares of General Motors to see how this purchase helped the price to go up 1/8 of a point. We started at post 4, but this actual purchase was started at a broker's office in Des Moines, Iowa, where a farmer named Bill Gannon decided to buy General Motors.
I believe I could handle 100 shares, John. You go ahead and get
All right, I'll buy that at the market.
All right.
The broker's office on West Locust Street, Des Moines, now asks its office in New York for 100 shares of General Motors.
Here's an order, Bill.
The query goes down to the forward trading point at post 4 on the floor.
100 General Motors at the market.
All right, 100 General Motors at the market.
How's General Motors?
58 and 3/4
58 and 7/8 for 100.
So, General Motors, 58 and 7/8.
Bought 100 General Motors at 58 and 7/8.
Bought 100 General Motors, 58 and 7/8. Market report.
That's right. There's quite a few getting in use.
Mr. Gannon, looks like you bought 100 General Motors at 58 and 7/8.
Bill Gannon invested some $5,800 in this stock on October 27, 1953. Since then, a total of 674 million shares of stock has changed hands here. And no one knows how many tons of ticker tape and trash have been swept away. For the last year, general business conditions in the nation have just about held their own. General Motors has had a big year. Its production and sales stayed close to the 53 level. Yesterday, we went back to Post 4 to see how Farmer Gannon's 100 shares had done in those 14 months.
Fine, General Motors, 98 1/8.
General Motors, as of yesterday, 98 1/8. That's a net rise for the 14-month period of 40 1/4. If customer Gannon held his 100 shares, he will have made a profit of $4,000 on a $5,800 investment. At the time of our report of 14 months ago, Scott and Rossi narrowed their focus to 5 other stocks in the quotation room.
BP, 43 3/4 to 4 1/8.
BP, Union Bag and Paper, was 44 1/8, now 70 3/8.
SYE, 34 to 1/4.
SYE, Skelly Oil, was 34, now 51 3/4.
HLT, 17 3/4 to 18.
HLT, Hilton Hotels, was 18, now 37.
MGR, 62 3/4.
MGR, McGraw Electric, was 62, now 112. In all, the Dow Jones average of 30 industrial stocks is up $125.72, or up 46% over 14 months ago. The market closed at 3:30 this afternoon. Trading will begin again at 10 o'clock tomorrow morning. The losses of last week have pretty well been restored, and the bull market continues. Immediately following this message from Alcoa, we'll take you to a seminar on the stock exchange at Columbia University, and then to the office of a United States senator whose committee is going to investigate the exchange. Time now for Alcoa.
A dream bus of the future? No. This striking 43-passenger Greyhound Cena Cruiser is already on the highway. Soon, 500 of them will be in service throughout the United States. With dramatic innovations for comfort, safety, and sightseeing enjoyment, the Greyhound Cena Cruiser brings the American people a new concept of luxury in highway travel. To achieve this miracle on wheels, more than 5,500 pounds of aluminum was used. On the exterior of the bus, Alcoa aluminum is used from the massive front bumper, cowl, and windshield frame to the rear bumper and tail lights. The Cena Cruiser is built by General Motors, GMC Truck and Coach Division, which uses many forms of aluminum, sheet, castings, and extrusions. Even for these luggage lofts, window frames, and interior trim, Greyhound has used Alcoa aluminum in its regular buses for over 20 years in order to have strength without added weight. To speed development and production of this luxury-loaded Cena Cruiser, Greyhound again turned to Alcoa. For bus owners, the use of light but strong Alcoa aluminum means greater operating efficiency, less maintenance, increased fuel economy, and a greater load-carrying capacity. For bus passengers, Alcoa aluminum helps to open a new era in low-cost luxury travel. Now, everyone can ride in complete comfort, travel in home-like luxury, see America through giant picture windows. The Greyhound Cena Cruiser is one more example of how Alcoa meets the demands of modern industry and contributes to modern living. Aluminum by Alcoa, Aluminum Company of America.
There is no shortage of experts on the market. As for us, we're barely able to tell the difference between a bull and a bear. So, we sat in on part of a seminar at the Graduate School of Business at Columbia University. After all, it's older than the stock exchange. And we thought professors familiar with the language of the street might treat the market with detachment. Dean Courtney Brown and Professor Benjamin Graham were instructing future brokers and customers' men. Here is See It Now's short course in the market.
First, let me give a caution. I hardly need give it to a group of informed students such as you. No one knows precisely why the market behaves as it behaves, either in retrospect or in prospect. The best we can do, as you all know, is express informed judgments. But it is important that those judgments be informed. We do know that there has been a substantial rise. That rise has been going on for a number of years, particularly since the middle of 1953. And we do know that the rate of that rise has been very rapid, uncomfortably like that of the 1928-29 period. It has resulted in a lot of comparisons being made in the press. Moreover, the present level of stock prices, as measured by the Dow Jones averages, is about equal to, indeed a little above, the peaks of 1929. A number of explanations have been advanced regarding the stock market rise that suggest it may reflect a return to inflationary conditions. This doesn't seem to me to be very convincing. First, because there is no evidence of inflation in the behavior of commodity prices, either at the wholesale or at the retail level. And there hasn't been over the past year and a half. Extraordinary stability in the behavior of both indexes. There is so much surplus capacity around in almost every direction that it's hard to conceive of a strong inflationary trend reasserting itself at this time. Still another explanation is that the stock market has gone up because there has been a return of that kind of speculative fever that has from time to time in the past gripped the country. The Florida land boom, the 1929 stock boom, they've occurred in history, as you know, all the way back from the tulip speculations in Holland. I suspect there's a certain element of truth in this one. However, it doesn't seem to me that it gives us too much concern, because there has been no feeding of this fever by the injection of credit. I think it is important for us to observe that the amount of loans, brokers' loans, loans made to brokers for the financing of securities of their customers that have been bought on margin, are less than $2 billion at present. In 1929, they were in excess of $8.5 billion. And there is now a larger volume of securities on the stock exchange. Gentlemen, Professor Graham will pick up the story at that point.
One of the comparisons that's interesting is one not between 1929, which is so long ago, but 1950, which is only a few years ago. It would be very proper to ask, why are prices twice as much as they are now when the earnings of companies, both in 54 and probably in 1955, are less than they were in 1950? Now, that is an extraordinary difference. And the explanation cannot be found in any mathematics, but it has to be found in investor psychology. You can have an extraordinary difference in the price level merely because not only speculators, but investors themselves are looking at the situation through rose-colored glasses rather than dark blue glasses. It may well be true that the underlying psychology of the American people has not changed so much, and that what the American people have been waiting for many years has been an excuse for going back to the speculative attitudes which used to characterize them from time to time. Now, if that is so, then the present situation can carry a very large degree of danger to people who are now becoming interested in common stocks for the first time. It would seem, if history counts for anything, that the stock market is much more likely than not to advance to a point where of real danger.
You've said that stock prices now are not too high, but that you fear they will go higher. Well, then are you recommending the decline?
Well,
may I defend you on that?
Yeah, go right ahead.
Those who have watched the security market's behavior over the years have become more and more impressed with the fact that stocks always go too high on the upside and tend to go too low on the downside. The swings, in other words, are always more dramatic and more, the amplitude of change is greater than might normally be justified by an analytical appraisal of the values that are represented there. I think what Professor Graham had to say was that his analysis of a series of underlying values would indicate that the stock prices are just about in line with where they might properly be. However, from experience, that would be the least likely thing to happen, that stocks would just stabilize right here. Now, if it's the least likely thing to happen, and you have to select a probability between going up further or down further because of the strong momentum that they have had, I think I would be inclined to agree with him that the more probable direction would be towards somewhat higher level. Yes, sir.
Formerly, when stockholders believed the market was too high, they switched from stocks to cash. Now many people feel that due to capital gains tax, they are not free to act. They are what you might say locked in. What effect does this have on the stock market in general?
Yes, there's no question about the fact that it does discourage some sales that might otherwise be made, because one selling stocks and trying to replace them would have to replace them at substantially lower prices to come out even after paying the capital gains tax. However, that's not the only reason people are reluctant to sell stocks and buy bonds. Stocks are still yielding about 4.5% on the basis of current dividend payments, whereas bonds of prime quality are closer to 3%. Here again, we find a contrast with the situation in 1929, when stocks were yielding about 3.5% and prime bonds closer to 5%.
In addition to raising margin requirements, should the federal government take other measures to check a speculative boom in the stock market, and which method is the better?
My own opinion would be that the Federal Reserve should first exhaust the possibilities of raising the margin requirements to 100%, and then consider very seriously before they imposed other sanctions.
If needed.
If needed.
What is the significance of the broadening public participation in stock purchasing and ownership?
There are probably two elements there that are important. One, the broadening participation of the public in stock purchases is one measure of the degree of speculative fever that we were talking about before. However, subject to that being controlled, and I believe that it can be controlled, as Professor Graham has indicated, but over and above that, there is a broad social significance to that, it seems to me. What it in essential terms means is that the ownership of American industry is being more widely dispersed among more and more people. This has very favorable repercussions in terms of our political and social life.
This question concerns the so-called Wall Street professional. Are Wall Street professionals usually more accurate in their near or long-term market trends, forecasts of stock market trends? If not, why not?
I said, you say that they are more often wrong than right on their forecasts?
What I mean is, are they more accurate in the shorter term than the long-term forecasts?
Well, we've been following that interesting question for a generation or more, and I must say frankly that our studies indicate that you have your choice between tossing coins and taking the consensus of expert opinion, and the results are just about the same in each case. Your question as to why they are not more dependable is a very good one and an interesting one, and my own explanation for that is this, that everybody in Wall Street is so smart that their brilliance offsets each other. And that whatever they know is already reflected in the level of stock prices pretty much, and consequently what happens in the future represents what they don't know. Yes, sir.
Would you kindly comment on an item appearing in the newspapers to the effect that while 45% of buying today is on margin, only the money borrowed is equal to only 1% of the value of listed stock?
The amount of trading on the stock exchange is a very small part of the total value of all the securities that are listed thereon. And when you say that the total amount of borrowing on margins financed by brokerage loans is only 1% of the value. It still is it is a reconcilable figure. You can't reconcile it unless you have the detailed data with you, but it isn't incompatible in any way.
I might add a point on that, Dean Brown, and that is that, that the slow increase in brokers' loans as compared with 45% marginal trade would indicate that a good deal of the marginal trading is between people who are taking in each other's washing. That is, the marginal buyers are buying from sellers who were previously on margin. And that's why the rate of growth of brokers' loans is so much smaller now than it had been in the 1920s, when I think a good deal of the selling had come from long-term owners and really smart people who were selling out to the suckers.
I want to raise a point of argument here on this question of inflation. It seems to me that you're correct in stating that there's been no inflation in '54, but there also appears to be several long-term inflationary points in the economy today. These, I think, are the deficit spending that's supposed to be continued by the government, the easy money policy, which is expected to continue, the question of increased union wages, the talk about increased minimum wage, and the talk about a guaranteed wage. All these, and on top of this, the road program of $101 billion, which the government has just announced. These seem to me to be long-term inflationary things in the U.S. economy, and I wish you'd talk about these.
That's a question that has a good many angles on it. Perhaps we both better try it. Professor Graham, why don't you take the first crack?
Well, I think there are two answers to that in my mind. The first is that acknowledging that there are inflationary elements in governmental policy as it's now being carried out, it may be argued that those are just necessary to keep things on an even keel, because without them, we might have some inbuilt deflationary factors in the way business operates through increased productivity, capacity, and so forth.
I've been impressed with the possibility of labor costs as an inflationary factor. But a rise in wages does not necessarily mean a rise in labor costs. It depends upon the relationship of the rate of change in wages and the rate of change in output per man hour, or productivity. Now, if wages are related to productivity, as you know they were in the General Motors contract, there is no necessary inflationary consequence to be anticipated. However, apart from that, it's entirely possible that if wages go ahead faster than changes in productivity, there could be a seriously inflationary factor.
On the basis of your recent answer with regard to the psychological impact of the present condition of the market on the small investor, do you discount the entire theory of dollar averaging?
I think there's no doubt, that accepting your premise, the man will put the same amount of money in the market year after year for the next 20 years, let's say. There is a great chance of coming out ahead regardless of when he begins, and particularly regardless if he should begin now. You have to allow for the human nature factor, that no man can really say definitely just how he's going to behave over the next 10 to 20 years. And there is danger that people who start with the idea of being systematic investors over the next 10 to 20 years may change their attitude as the market fluctuates. In the first instance, put more money into the market because they become speculators, and secondly, get disgusted and scared and don't buy at all later on when prices get low. It's a psychological danger. The fault is not in the stars or in the system, but in ourselves, I think.
That was a glimpse of a seminar examining the stock market at Columbia University. We move now to Washington, where Democratic Senator William J. Fulbright has announced that his Banking and Currency Committee will conduct an investigation of the market.
Senator Fulbright, why is your committee going to investigate the stock market?
Well, Mr. Morrow, there are two principal reasons. One is that my committee has jurisdiction over the subject matter through its control and responsibility for the SEC. The second reason is that the unusual increase during the last 12 to 18 months in the level of prices would seem to warrant a study at this time.
Well, are you worried about another 1929?
Well, of course, there's certainly a possibility of it. This situation is reminiscent of 1929. We know the Great Depression in the early 30s was heralded by the tremendous increase, the great rise in the stock market, and then the great drop. And that's unsettling to the whole economy, and it frightens people. It causes great harm to people on fixed incomes and so on. And another thing about it is that the greatest criticism of our system and our economy by our enemies, especially the communists, is the instability of our economy and the wild fluctuations. And we should endeavor to minimize those fluctuations. Now, I don't know all the reasons involved in this. That's why we're going to have the study. But the objective is to inform the Congress and inform the people as far as we can about the conditions that now exist, and we would then hope to be able to develop some remedy for it, some way to control these wild fluctuations. I confess, with what limited knowledge I have, it does disturb me because it has gone up for such a long time and to such a great extent. I think far beyond what the conditions in the country itself warrant. I happen to know of my own knowledge that in the agricultural areas in the Southwest, we are having a very severe depressed period. There is no boom in the agricultural areas, the rural areas of the West and the Southwest, so that most of this boom is concentrated in the market, and I think it is unhealthy, but I'm unwilling to take a dogmatic stand now. That's why, as I say, we'll have the study.
Well, Senator Fulbright, I think you have referred to this as a friendly investigation. What exactly is a friendly investigation?
Well, what I meant to convey is that I have no knowledge nor even suspicion of wrongdoing, manipulation, or anything of that kind in this increase. And I approach it in a friendly spirit, in the spirit of trying to find out for the information of the country and of our committee and of the Congress what has been taking place. And I'm not approaching it with the idea that we're going to reveal a lot of wrongdoing.
The stock exchange hasn't been investigated for 20 years, but it remains the subject of curiosity and concern as to whether what is good for the exchange is good for the country and the people who live here. There have been no official charges that it has been rigged or manipulated, but rather the question of whether or not the market is healthy. There is wide disagreement amongst the experts as to why the market behaves as it does, but there is considerable agreement that it behaves the way it does because people behave the way they do. Good night, and good luck.
For the gift to be remembered, for lasting beauty and heirloom quality, give Hallite cooking utensils, created by Wherever. The gleaming copper-colored covers always stay bright and shining. They never tarnish. They never need polishing. Hallite utensils are made of an extra hard, thick alloy that keeps its sparkling beauty. Each Hallite pan and each copper-colored cover has its own transparent leaf hanger, so they can be hung like pictures to create different and attractive wall arrangements. With friendly-to-food Hallite utensils, the cooking heat spreads quickly and evenly, not only over the entire bottom of the utensil, but up the sides, too. For that gift of a lifetime, give the most beautiful and the most useful cooking utensils in America today. Hallite utensils, designed by Wherever. Aluminum, from the ever-expanding facilities of America's foremost producer, Alcoa, Aluminum Company of America.
See It Now, like the I Can Hear It Now record albums, is edited and produced by Mr. Morrow and Fred W. Friendly.